Innovative Industrial Properties Stock, ticker symbol IIPR. This stock was requested by you guys. IIPR is down 25% year to date, underperforming the overall market big time. On the 2nd of August, IIPR presented quarter results where they beat on FFO and revenue. For the upcoming earnings, analysts think they will beat again. People love innovative industrial property stock because of multiple reasons, and one of them being the dividend, and I understand why with dividend yield at 9.7% and a 5-year growth rate of 45%. So could this be the perfect moment to buy innovative industrial property stock? Well, I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks and great prices. So what does IIPR do? Innovative Industrial Properties is a real estate investment trust focused on the acquisition, ownership and management of specialized properties leased to experienced state licensed operators for their regulated cannabis facilities. The regulated cannabis industry has experienced tremendous momentum in the United States, with 39 states and Washington DC have legalizing cannabis for medical use, and 21 states and Washington DC having legalized cannabis for adult use. Innovative Industrial Properties was founded in 2016, so we don't have a long track record. Regulated cannabis sales estimated to grow to 45 billion by 2027, almost double the 2022 estimated regulated sales of 26 billion. If we check the most recent earnings report, we see that the average lease length is around 14.9 years in total. EPR has 108 properties in their portfolio, totaling 8.1 million square feet in 19 states. We also see that growth is slowing down a bit on the right side, so this is something to keep in mind. If we check the geolocation and portfolio breakdown, we see that they are very well diversified for their age. 58% of the tenants are publicly traded while 42% is private. Roughly 91% is industrial and only 3% is retail. When we check the growth numbers, it is looking pretty amazing, but keep in mind growth is slowing down a bit. However, FFO is still looking really good. In the end, this is one of the most important numbers for REITs. It is clear that IIPR needs to grow and diversify even more. Right now, 72% of the company's invested capital is represented by the top 10 tenants. To me, this doesn't look good and I prefer a lower number here. But to be fair, they need more time for this. Another thing to keep in mind is that IIPR has BBB plus ratings, which is not so bad, but I prefer A ratings here. It's expected that the cannabis industry is going to grow at a high level, which is shown here. Potentially a lot of new customers for IIPR. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. IIPR is a 2 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 9.61, indicating they might be undervalued. Later in this video I will show you my 3 price targets for IIPR stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 293 million and in this graph we see that revenue went up in the long run. Again, it is slowing down a bit right now. We see that margins are going up quite nice and steady. To me, this looks very good. EPS is following the same pattern, nothing really special to add here. Analysts expect really low EPS growth in the coming years, which is kinda interesting. For the revenue it is a pretty similar story. 2023 is going to be a great year. After that, things are slowing down. Return on assets is sitting at 6%, which is a decent number, even for a REIT. Return on equity looks really low. And the most important number, return on invested capital, is sitting at 4.1%, which is again a low number, but it is slightly higher than the 5-year average, so that is nice. Current ratio is at 1.92, which is a great number for a REIT. Nothing too special to add here. Right now, IIPR has 300 million in debt, and I prefer companies that can pay down at least a big chunk of the total debt with the total cash. IIPR has 92 million in total cash, so they can almost pay down a big chunk of their debt. This is something that I do like, especially for a REIT. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 9.7%, which is a great number. Annual payout is at $7.2 and payout ratio is at 88%, which is above the average for REITs. The 5-year growth rate is at 45%, which is an insane number for a REIT. And they grew the dividends for 5 years in a row, which is also very nice. And here we see that the dividends paid since 2017. It is increasing at a high amount every year, so this looks really good to me. We also see that growth is slowing down a bit, which is not a bad thing in my opinion. In this graph we see the expected dividends in 2023, 2024 and 2025. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at slightly lower levels, which is very nice. Overall these dividends look really good to me, but how about the historical returns? I decided to compare IIPR stock with the overall market, in this case the S&P 500. Next to that I added LXP and PLIM. On the 5-year chart we see that IIPR did beat the S&P 500 big time, with a 131% return including dividends. The S&P 500 had a 66% return, and both competitors have a lower return. On the 1-year chart it looks pretty different, with IIPR sitting at a minus 12.5% return. The S&P 500 and PLIM are having a significantly higher return, and keep in mind this is including dividends. On the 6-month chart it is again IIPR having the highest return, sitting at 12%. On the 1-month chart it is the other way around again, with IIPR sitting at minus 10%. But to be fair, all stocks are seeing a negative return in this list. So bottom line, IIPR beats the S&P 500 long term. And with the stock hammered down quite a lot recently, it could be an interesting buying opportunity. So could this be the perfect time to buy IIPR stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 7, 8 and 9%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 52, 55 and 58%, and for the free cash flow margin I'm putting in 80, 82 and 84%. For the PE ratio I'm putting in 12, 13 and 14. And for the price to free cash flow I'm putting in the same numbers. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now IIPR stock is at $73. I hit analyze and we see a lot of green numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $101, we have a mid price target of $115 and we have a high price target of roughly $132. To me the low to mid price target is the most justified here, indicating that this stock is undervalued right now. My final conclusion is that this company is in a booming industry. We see high growth numbers for the industry and potentially also for IIPR themselves. Most fundamentals look good to me, and the fact that debt is pretty low compared to the cash position is also something that I really like in this stage of the business. I would prefer a better diversification in terms of tenants, but that takes time, so it doesn't bother me that much right now. Dividends look pretty amazing, but if payout ratio is a little bit lower, I'm satisfied. The valuation looks also really good to me, and with the stock coming down quite a bit recently, it might be a perfect time to start a position in this company. For now, I'm adding them to my buy list and do some more research in the industry and the company itself. I will definitely wait for the next earnings report to see the current growth numbers. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.